But
Mm.
now gold has just come out blazing, pushing to new all-time highs again, just like it did back over here. And I like to look, Dave, as gold is like, look at planet Earth as like the beehive mentality. Everybody on Earth has the same mentality, and that's they buy gold when they think when there's war going on, there's uncertainties, there's bubbles everywhere. People start to move into gold, and that's what we're seeing. I think globally, a lot of people are uneasy. They're concerned about all kinds of stuff unfolding. And so this is a huge red flag that I believe we've hit that measured move. There might be some more upside potential in gold right now.
Welcome back to the channel, and we are going to take a regular look at everything technical analysis. And I'm joined once again by one of our returning guests, Chris Vermeulen of the Technical Traders. Chris, welcome.
Hey, thanks for having me, Dave. Always a pleasure.
It's great to have you back. It's a very interesting time to have you back as well, because we're just after the US election and we're seeing an awful lot of volatility in metals. We've seen metals been on a run since the beginning of this year, and they took somewhat of a hammering yesterday. And at the same time, we saw a massive rally up over 1,500 points in the Dow. Interesting times.
Mm-hmm. No doubt. Obviously, a big shakeup, big event, big news in the States. I don't know who's president, Donald or Elon. They're kind of like a couple now, right? But yeah, it has definitely shaken things up. Obviously, investors are, I think, happy that Trump got in business wise. Everybody's piled into the stock market. Small cap stocks rallied like 6% in the US. Just showing that people just want to get back into the risky, the growth stocks. So that's good. But of course, if there's money flowing into the risky stocks, people want to pull money out of their kind of boring defensive safe haven plays like gold, and bonds fell really sharply as well. So obviously it's, with money's going in one direction, it's got to come from somewhere else. And that's what we saw, as you just mentioned. Gold took a pretty big hit the other day, and same with silver. But it really is just a news driven move. It's a recalibration of people just shuffling their money around based on future expectations.
So is the rally in metals over? What are the charts saying?
Yeah, I mean, the charts are really interesting. You and I have touched on this a long time ago, and I've been talking about this specific level in gold, which is 2750 for a long time. The
Mm.
monthly chart is the best view of this. It gives us a really good barometer or a feel of where we are in some major stages and cycles. So gold and commodities go through these massive like 10, 15-year super cycles. We have gone through, we are currently in a fresh new one as of 2019. But the last one, the previous one started back over here in 2001, 2002. And what is really interesting is I love Fibonacci extensions. These are the most powerful tool to identify price targets and how much potential there is. And if we were to use a Fibonacci extension, this will tell us based on the previous rally up to the 2011 highs and the 2015, 2016 lows here, it will tell us where those resistance levels are. So more or
Mm.
less, we had the rally up, the first major super cycle rally. We had a correction, a pullback. And then in 2019, we broke out of this base and we started another super cycle. And what I always follow with Fibonacci is if we hit this 618 level, so 61.8% of this initial rally, and we see the market pause and pull back, we almost always go up to hit the 100% measured move, which is what one
Wow.
is, 100%. And so this is that 2,750 level on the chart that I've been talking about for several years. And what happens, what's the key thing right now unfolding, which kind of ties all this in with the stock market is, we've had this pause, this multi-year pause. Well, we actually had a multi-year pause back over here
Look at
during
that, yes.
mid 2000s. And during this pause in gold is when stocks skyrocketed, real estate took off. And then eventually things got close to an end, and we saw gold come out of nowhere and silver and rally. And that is what we're seeing now. During this pause that we've had over the last few years in gold, stocks have rallied, real estate, there's bubbles everywhere. But
Mm.
now gold has just come out blazing, pushing to new all time highs again, just like it did back over here. And I like to look, Dave, as gold is like, look at planet Earth as like the beehive mentality. Everybody on Earth has the same mentality, and that's they buy gold when they think when there's war going on, there's uncertainties, there's bubbles everywhere. people start to move into gold. And that's what we're seeing. I think globally, a lot of people are uneasy. They're concerned about all kinds of stuff unfolding. And so this is a huge red flag that I believe we've hit that measured move. There might be some more upside potential in gold right now. But as you and I talked months ago, this is kind of where we are talking about the market's going to. And then from here, we probably see some multi-month pause and pullback while the stock market eventually resets. And then I think gold is off to the races for what will be a multi-year rally like we saw last time, where it could be 3,000, 5,000, 10,000, whatever gold settles at. So there's not a whole lot of upside, I don't think, right now imminently for gold or silver because they're doing the same thing. But
Mm.
this is a very strong chart pattern, and it points to much higher pricing down the road, and tells us the sentiment of what most investors are doing. They're moving to physical metal because they're scared about the currencies. Currencies are all over the place. Stocks are overvalued. Real estate's overvalued. Momentum in the U.S. economy is starting to slow. And so people are moving here to get out of those systems and hold physical metal. And as you know, I'm a big fan of physical metal. I've got all kinds just sitting around me. I like to collect all types of different types of metals, but this is what people have been doing right now. And now we just have to let the markets kind of do their thing. I think they've hit that target that I've been looking for.
Yeah, now you see the extent of that rally there from the beginning of the year. It gold nearly going parabolic at that stage. Things don't go up like that forever, and it does take a breather. And so yes, that it doesn't seem unrealistic that we're going to see a bit of a correction or a little bit of a sideways move for a while, or sideways and slightly down before we make another trek higher.
For sure.
Um,
And just to quickly touch on, like when we look at the daily chart of gold, as you were mentioning a minute ago, how we saw a very sharp pullback. I think a big chunk of this, obviously, money was flowing out of these defensive plays and into stocks because they want to try and earn dividends and get into something that could move faster.
hmm,
But a huge chunk of this was the U.S. dollar. We saw the U.S. dollar have one of the biggest rally since 2020. A huge move up in the dollar generally puts pressure on gold.
on metals,
And
yes.
we're seeing that a big move in the dollar being given back today. And that's simply what happens when there's a news driven move and something goes parabolic. You can't trust that move.
Yes.
Usually it can be given back within a couple of days. And we're seeing that in the dollar right now. But one other thing that really supports, that we're getting closer to, I think, the music coming to an end with the economy and the stock market rally is we've seen the US dollar post huge gains this year. Well,
Hmm.
just really in the last month and a half. And if we flip to gold on the exact same chart here, gold has done the same. It has just gone up. So typically when there's chaos in the world and recessions hit, we tend to see the US dollar index do very well. So the fact that gold as the defensive play has been rallying with a strong dollar tells me more and more that things are not going well behind the scenes. The music's going to come to an end. Now Trump has re-energized this market.
Hmm.
And we just had a big correction since August in the big tech stocks, which we can see here in the NASDAQ. If we look at the NASDAQ, we've had a very big pause here. This is considered a huge consolidation.
Wow.
And a consolidation or a pause rejuvenates the market. If we scroll way back in time, anytime there is a big pause and consolidation, it resets the market to go higher. And of course, after this pause is done, we see a rally. We have a rally. And now we're going to have potentially another rally. The NASDAQ's pointing to potentially a 16% move to the upside. This is probably going to be like a presidential Trump driven rally. And then I think maybe the music comes to an end. So we just have to see how much momentum there is behind this Trump move, more or less going on right now. And gold, I think, will still do well. Gold should actually continue to perform or hold its value. I don't think it's just going to plummet and fall. I think there's still a lot of fear, and gold is going to hold up and rebound and potentially poke to nominal new highs. Gold won't start to fall until I think the overall stock market finally puts in a major top. And so say we see the NASDAQ rally up even more, eventually when the NASDAQ starts to break down and sell
Turn
off,
over.
I think that's when gold will start to pull back. But
Sure.
gold is still bullish. It's still in an uptrend. You don't want to bet against it. I mean, it is
Sure.
still a buy technically because it is trending higher. And we're in a market environment where gold can rally. Even when the stock market starts to sell off a little bit, gold can keep moving higher. So
Hmm.
it's not a point to jump ship.
Mm.
For gold, but it's definitely just we're getting close to, I think, the music coming to an end for the equities market.
I mean, ultimately, gold responds to uncertainty. Although we have clarified one aspect of that uncertainty, as in we know who the president is going to be for the
Yep.
next 4 years, there's still an awful lot of uncertainty about the globe. A
Yeah.
lot of geopolitical tension. We're seeing tension. We're seeing escalation between Russia and Ukraine. We're seeing tension in the Middle East increasing. We have tension with China. I mean, the uncertainty, and particularly add in there the BRICS and the development of the BRICS and the move towards de-dollarization. We've got a lot of uncertainty there. So we've
Mhm.
resolved one aspect of that, and probably the easiest thing to resolve, and the one with the shortest time frame, which is who's going to be the next president of the US. So we had a bit of a response on that, but I think we're, that the ground is set for further uncertainty and further higher gold prices. One thing I wouldn't mind asking you about, oh, you've actually pulled it up there, is silver. Um, Silver has it's had a strong rally this year, nowhere near as much. We're still at a fraction of the all-time high that we saw during the last big bull market. What's your feeling for silver?
Yeah, so silver is doing a lot of the same of what gold has done. It started a big rally. It went into a multi-year pause back in 2006, 2007. People piled into silver as a defensive safe play. 2008 crisis hit. Once that flushed out, we saw everyone want to move. They wanted to get away from everything that crashed, which was houses and falling stock prices, and they all moved into metals as the safe haven play. So I believe we're doing something similar. Silver's been trading sideways here for a while, and stocks have been rallying, and now we've got silver moving up. I still think we're going to see silver push potentially a little bit higher, 35, potentially all the way up to about 37. It could push a little bit higher, but in the grand scheme of things, it has really hit its key target. Just looking at this wick high that we had, this brings us right into these highs on
Mm,
the monthly chart here. And so there's a high, another high, a pivot low. So this is a very critical point. It did tag it and it sold off. Again, I think gold and silver have made the easy move is up. Up has been completed. The easy money's done. Now it's like, can it break through these resistance levels? Can it push even higher? And that is a little bit of a stretch. I think if anything, they're probably going to pause and pull back. They might not have a big correction this time around. Maybe we're going to see gold and silver hold up really well while the economy kind of falls apart, if it does fall apart, and then it just keeps going higher. So, we might not see the big pullback in them. They might hold their ground because we do, as you just mentioned, David, a whole bunch of stuff going on with BRICS and currencies and what's going on globally and cryptos. I think we could see potentially precious metals actually hold up a lot better than they did in 2008. But I don't think they're going to skyrocket and take off here, even though there's a lot of uncertainty. Once selling hits the market and investors become scared, there's forced liquidation because of margin calls, because everybody always owns more than they can afford and they're always using borrowed money. But they also just get scared and they don't know what to do. And eventually people hit breaking points where they're just like, just sell everything, put me in cash. And so it will pull stuff down. So silver is the same scenario as gold. Not a whole lot of upside at the moment. I think in the future, late next year, potentially, or whenever the market resets, I think silver will be like $80, $100 an ounce going forward, and it'll blast through the previous highs that we saw back in 2011. But right now, it's May that's run up, and now it's taking a pause and breather, and we just need to see how it's going to shake out here.
Crypto responded really well to the news of Donald Trump being elected. Have you a chart on Bitcoin there? And let me just know your thoughts on it.
I like Bitcoin. I haven't bought Bitcoin in like feels like 5 or 10 years, forever, and I haven't been a big fan of crypto or Bitcoin, but I actually bought Bitcoin yesterday, November 6th. For the first time, I bought some Bitcoin in forever, simply because I like this chart. And it's more so of a speculative play just to get on board with everyone else who's in it. It's not a big position, but I'm having fun with it because I like this chart. If we look at this chart, we can look at a few different ways. This is a massive cup and handle formation. Cup and handle formations are one of the strongest, most bullish chart patterns. Typically, the depth of the cup is what you can like stack on top. And sometimes you can stack it 2 or 3 times up, which puts Bitcoin into a ridiculous,
Hmm.
crazy valuation, which I don't even want to really point to. But if we take a look at the most conservative view, we can go from the low that we saw in Bitcoin in 2022 up to this recent high. This is using the Fibonacci extension I used earlier. We bring it down to this low, and it's going to give us some upside targets. And if we look at these upside targets for Bitcoin, it brings us up to like 108. I mean, this is the monthly chart. If I zoomed in, it brings us usually to about 112, 113, 112, 113,000 per Bitcoin. So Bitcoin is breaking out of a beautiful bull flag or cup and handle pattern. And so there's some imminent upside. I think this could continue to scream higher and become kind of a market leader at this point for the next little bit.
Two things I want to touch on before we wrap up. One of those is the stocks, and we maybe look at something like the Dow or whatever. We had a massive rally in that. There's David Hunter's been on this channel many times, and he's made some rather aggressive calls. One said he was looking for 45,000 on the Dow, and everybody was calling him crazy for that. And that was probably when the Dow was at about 2,800 or 28,000 rather. We're not too far short of 45,000 now on the Dow.
Yeah.
Where do you think this goes? I know you think that we might have a bit of a pop, which is kind of post-presidential election rally for the next couple of months. Is that right? And where do you think it'll get to?
Yeah, I don't follow the Dow too closely, but because it's really heavily weighted in certain kind of aspects. But if we use Fibonacci extension, this actually shows where the Dow could run based off this most recent price action. It's actually showing we could see this continue to run to roughly 47,500, which is, another 8 or so percent to the upside from here.
Yeah.
Which falls in line with the SP 500, I believe, can run another 5 to 8%. And I think the NASDAQ could actually pop about, well, from where it is now, probably like another 13% or so. So there is upside potential, and it could blast past that. I mean, we're coming down to a euphoric phase. I think, again, I think Trump is sparking interest. We've got a broad market rally. People are moving into very aggressive stuff. And, typically this type of news and markets hitting new highs is what pulls new money into the market. People who have missed out on this rally, if you're not long this rally, you're probably feeling like, you're going to be frustrated. And so eventually the market's going to rally enough, and it's going to pull those people in saying, I just got to get in. I'm not missing out on the next rally. And that's what I think I'm feeling and seeing in the markets right now. And based on comments from emails from investors all around the world, they feel like they're missing out. They want to pile in. And so this last big move might suck in anybody who's on the sidelines who can't take watching it anymore, pure FOMO. And then, of course, they're going to end up buying at the high, and the market has a correction. So we have some upside in the equities markets, but I do believe there's way more downside potential. I think once the music ends, we're going to be going down very, very sharply, potentially retesting the 2020 lows for the major indexes.
That's a significant drop from if we do get to the 48,000 level.
It is. It's a huge drop. Yeah.
Wow. The last thing I'd like to take a look at is oil. If you had a chart on oil and you follow oil, there's obviously got tension in the Middle East, which is really going to have an impact on oil if things escalate further there. We also have Trump very positive on oil production in the US and ramping that up. What are the charts actually saying? How's oil reacting?
Yeah, so the chart is, I mean, really in the grand scheme of things, if we zoom out on oil and look at the price action, kind of where it is, if we kind of take a bunch of these lows down here and bring it up to a bunch of these highs, the reality is oil is kind of like dead smack center in the middle of its range. So take an elastic band, you overstretch it one way, it goes the other way, right? There's always elasticity in the market. So it's stuck in the middle. I would argue that it's a bearish chart pattern. I would say the leg has been to the downside. It is now consolidating, creating a pennant or bear flag pattern. I think, if Trump's going to crack open all the reserves in the United States, we got a hell of a lot more oil now available, and we don't have to rely on it, overseas. And if we go into a recession or something, demand is going to fall. And I think we're going to see, $45 per barrel. I think fairly easily next year if the economy kind of and things unfold as I expect. So it could actually go further than that, but that is a very conservative view. And, a lot of people are like, there's no way it's going back to 45. But if you just draw a line across here at 45, we've traded at 45 so many times, and really not that long ago, we went negative, so that is where oil is. And I believe it's got downside potential. An interesting aspect here is if you look at the energy sector stocks, and I find, everybody has been piling into energy sector stocks, expecting $200 per barrel oil. That's what I keep hearing. Last time we've seen oil get up into these ranges, it has been a 2008 financial crisis, a bear market, a weak economic market, and now we're back here. And the fact that oil is like really not that well priced at this point, in my opinion, everybody's expecting oil to go higher, and they're betting on energy stocks that are going to make the money. And so everybody's already positioned in the oil play, expecting it to go higher. That is generally not a good sign. I think we'll see energy stocks break down. And this to me is a leading sign that oil is probably actually going to go lower, because investors are already piled into the leverage play and oil is not really moving. And I think they're just on the wrong side, and this is going to unwind. So I'm pretty bearish on
Interesting.
oil.
Interesting call. One last thing. I did say that was going to be the last thing, but I'm going to be greedy here. Mining stocks.
Right. Yeah, if we take a look at GDX, which GDX, GDXJ, silver miners, whatever, they're all pretty much the same trade. Ugly, ugly charts. They are trying to do, figure out what they're going to do. Obviously, gold is at new all-time highs. Gold miners, silver miners are nowhere near all-time highs. They're pretty much at resistance at these fairly significant highs, right through here. I don't see a whole lot of upside potential here. And of course, if the stock market rolls over, eventually we're going to see a swan dive like we've seen before. And I think miners will get wiped out and sell back down to 30s, 20 range, somewhere in there. So overall, the precious metal space is really kind of one trade. It's like, do you want to silver, gold, or miners? They all move a little bit different, but it's still the same play. They're generally going to do the same thing. So that's kind of where we are. I do think eventually here,
You're breaking hearts now saying this. You know that.
I am breaking hearts, but I mean that's what the charts are saying, and that's the way they've always moved. They generally move together, but the caveat here is eventually when gold, silver, and the markets reset, all of us gold bugs, because I have been part of a couple big gold bug rallies, will come out of like the next bear market like we saw back in 2008. And we're going to go into a multi-year run where miners will be like way undervalued because they'll be beat up again. And they're going to have those hundreds of percent returns. Some of them will have thousands of percent return. It's one of those life-changing opportunities. People have been waiting for like the next gold bug rally to happen since 2011 peak, and we're not there yet. I think we're still months and months, if not a year or so away. But when it does come, this will be the opportunity. This only happens a few times in your lifetime. If you're lucky, you catch one or two of them. Simply because most people don't learn about them until it's pretty much one of them's almost over, and then they've got it on their radar, and then they wait a decade or two for the next one. So anyways, there's lots of opportunity in the precious metal space. It's just, I don't think the big opportunity is right now.
Perfect. Chris Vermeulen, thetechnicaltraders.com. I'm going to put a link to your site in the show notes below this. I highly recommend that people check out your work and your site and your service. It's been a pleasure talking to you again, and I look forward to catching up with you again.
Thanks, Dave. It's always a pleasure. Take care.